Hi class. In this video we're going to look at some examples from chapter 5. This chapter has to do with adjusting entries, so these are similar to the homework. In this particular problem it says DeSoto Company must make 3 adjusting entries on December 31st, 2019. And we've got entry A, entry B, and entry C, and we are to post those in the general journal. So the first thing it says to do is to prepare the adjusting entry for supplies. So supplies used was $11,000, and it says supplies totaling $18,000 were purchased on December the 1st, 2019 and debited to the supplies account. So right now in the supplies account, it says that we have $18,000 worth of supplies, but we don't actually have that much because we used $11,000 worth. So we need to decrease the supplies account by the amount of supplies used. So to do that, it says when we put it in there, put those supplies in there, we debited supplies. So to get them out, we're going to credit supplies. And because those supplies are used, we're going to essentially change those supplies, which are an asset, into supplies expense, which means that we've used those supplies. And we've used $11,000. All right, so the next one says expired insurance, $8,200. It says initially the firm paid $49,200 for 6 months insurance coverage in advance and debited prepaid insurance for this amount. So this kind of works the same as entry A. We had purchased an asset, which was our prepaid insurance, for $49,200, and that's the amount that's showing in that prepaid insurance account. But at this point, we don't really have an asset that's worth $49,200 because we've used some of that insurance, so some of it is expired. So I'm going to go down here to our worksheet. And it says prepare the adjusting entry for insurance. So to begin with, when we recorded that insurance asset, we recorded it as prepaid insurance, and that was a debit. So to remove some amount out of that asset account, we're going to credit prepaid insurance. We're going to change that asset into an expense. So instead of prepaid insurance, we should have an insurance expense. And I already forgot how much. $8,200 is what we've used. So we're taking $8,200 out of the asset, putting it into an expense account. And then it says adjusting entry for depreciation is what we're to do. It says depreciation expense for equipment is $5,800. So when you're recording depreciation expense, expenses are always debited to cause them to increase. And depreciation is a little bit different than the other two because we're not crediting an asset, which in this case would be the asset that this is tied to is equipment. With depreciation, we debit depreciation expense and we credit accumulated depreciation. That's the entry that you're going to use for depreciation no matter what it is. If this was depreciation trucks, then you would do credit to accumulated depreciation trucks, etc., etc. So that depreciation expense and that accumulated depreciation are a set that go together. And that was $8,200, I think. Oh, $5,800. So we're going to record our depreciation as an expense, and the credit goes in accumulated depreciation, which is a contra asset account. So when you're finished with that, those 3 adjusting entries should look something like this. Your amounts are going to be different, but the pattern of account names used should be the same. And then the second part of that is to post to your ledger. You've done this before in chapter 4. So I would just start at the top. Supplies expense, $11,000. Go to your ledger, find supplies expense. It was a debit of $11,000. And it's going to calculate the balance for you. And they've got it laid out fairly well. So just work your way down through the journal and take each one and post it to the ledger as either a debit or credit. However, if you have it here, it should carry over to the ledger the same way. So if it's a debit here, it should be a debit in the ledger. So that's how you're going to tackle that problem. So let's look at another one. This one's a little long. Just taking a minute to load. So this says the trial balance of Neal Company as of January 31st, after the company completed their first month of operations, is shown in the partial worksheet below. It says complete the worksheet. It's given us some adjustments, and then we have an analyze portion. So when you scroll down, you'll see this is a long question, but it's not going to be as bad as it looks. So when you look at the worksheet, you'll notice lots and lots of columns. If you are to cover up all of from this point over, from adjustments all the way to the right, you would just see a list of account names, and there's a debit and a credit column, and that's your trial balance column. So you've seen a trial balance before. Remember, your debits and your credits should balance at the bottom, and they do. These are all the accounts that you're using, and they're listed in order from assets all the way. All these are assets, or this one's actually a contra asset. We have one liability right here. We have two equity accounts, and then we start with our revenue, and then everything else is an expense account. So they should be listed in that order, and they are. If we look at farther to the right in the worksheet, you'll notice many more columns, and these columns come in sets. So you'll see a debit and a credit, a debit and a credit, debit and credit, and if we were to scoot over, there's a final debit and a credit. So you're going to work at this worksheet in terms of sets of columns, and you're going to work down through a set and then move over and move down through the next set. And so you're going to go down and across, down and across. So now that you kind of see how that works, we're going to work on the next set of columns, which is the adjustments columns. There's a debit column and a credit column, and these go together. So in the adjustments columns, we're going to do the adjustments. And there were, I think, 3 of them I read right here in the required part. It says make the following adjustments. Supplies on hand at the end of the month. So we're going to have a supplies adjustment. We've got some insurance that's expired, so we have to adjust our prepaid insurance, and we have some depreciation. So in the previous problem, we did journal entries, and you saw those adjustments and how they work in a journal entry format. This is the same concept, except for we're putting them in a worksheet, and we would put them in the worksheet, which was it'd be kind of an interim step. And after we finish the worksheet, we would still record those adjustments in the journal and then in the ledger, just like we did in the previous problem. We're just adding a step here. So our supplies on hand at the end of the month is $7,600. So this calculation is a little bit different. Excuse me. Because it doesn't tell us how many supplies we used, it tells us how much in supplies was left. So in this, we're looking to adjust the supplies account, and right now the supplies account has $37,700 in it. The instructions tell us that we have supplies that are left of $7,600. So instead of having a balance of $37,700, we should just have a balance of $7,600. So that amount is the balance, not the adjustment amount. So we have to figure out what we need to do to bring this balance down from $37,700 to $7,600. So to do that, we need to credit supplies, the difference in those two, which would be $30,100. So if we debit supplies $30,100, so we've got a credit, we got a credit and a debit, those two offset each other, and that would give us a balance of $7,600. Which is the amount that we have on hand. That should be the balance in supplies. The next one says, we didn't finish that one. That's a credit. Anytime we have a credit, we also have to have a debit, at least one of each. So if you think about the previous problem we did, when we credited supplies, we debited supplies expense. That's what we're going to do in this one. So we're going to come and find supplies expense and debit it for the same amount as we credited supplies. All right, now we can go to the next adjusting entry. And it says expired insurance was $7,200. So that's the amount of out of the prepaid insurance balance of $55,800, we have used $7,600. So we're going to credit that to bring that balance down, and we're going to debit insurance expense for the same amount. And that one's done. And then the last one's depreciation expense, $3,300. So find your depreciation expense. And remember in the last problem I said depreciation expense and accumulated depreciation go together. So there's our accumulated depreciation. That one is a credit. It's a contra asset, so it works backwards from a regular asset. So to make it a contra asset go up, we credit it. So there were only 3 adjusting entries. We have 3 credits, 3 debits, and our totals are in balance as they should be. So at this point, you're finished with the adjustments column. In the adjustments column, you can leave everything blank that's not adjusted. So the next thing we're going to do, I said we're going to work down and then across and then down again. So we're now to the adjusted trial balance column. The adjusted trial balance column is calculated by totaling across the balance in the trial balance and any adjustments that may have been made. So for cash, we had $103,300 debit in the trial balance area. We had no adjustments, so the adjusted balance of cash is still $103,300. Nothing happened to it, so it's still the same. The same goes with accounts receivable. We didn't make any, whoops, I'm down in the wrong box. We didn't make any adjustments to it, so it should be the same balance. All right, now we get to supplies. We had $37,700 debit, a $30,100 credit, so a debit and a credit offset. So take the debit, subtract the credit, that gives you $7,600, and that balance should go in the big side. So this works just like a T account. Take your debits and your credits, they offset, and the balance is the big part. And then that says we have an adjusted trial balance in our supplies of $7,600. On this particular one, I just wanted to go back up and show you supplies at hand on the end of the month were $7,600. So that's where that $7,600 comes in your worksheet. All right. That should be $7,200. I just noticed that was the wrong number. Sorry about that. Let's fix that in our insurance, and then we'll get back to doing our adjusted trial balance. Okay, so our insurance had a debit of $55,800, and we used $7,200. So at this point, we still have a debit balance, because that's the big side, of $48,600. Equipment was $107,300. We did nothing to it, so it's still $107,300. Oops. Your accumulated depreciation had no balance to start with, and we had an adjustment of a $3,300 credit. So that is actually the amount of the balance is the adjustment. That's the only thing that happened to it was that credit, so that is the balance. Accounts payable was $24,100 credit. We did not adjust it, so it's still $24,100 credit. Same with capital, we did not adjust it, so we just carry that balance over. Drawing $13,700, and that one's a debit. And then your income was no adjustment, so it stays the same. The hard part about this is making sure you're in the right column. That is the bad part. Let's see. I have moved something in the wrong place. I think I have moved my columns out of whack. I am so sorry. Let's see. Supplies was $30,100, so supplies expense should be $30,100. I have that in salaries. I think that fixes the problem. So as you can see, it is challenging to be in the right box. So if you come out with something that's not in balance, just make sure you have stuff in the right box. Or you'll be like me and you'll have it wrong. Salaries expense was $30,500 debit. We didn't do anything to it, so it's still that. Depreciation, $3,300 credit. And utilities, whoops, let's see, I put that one in the wrong box as well. $3,300 debit, I'm sorry, and $2,500 debit. Phew. Can't talk straight today either. All right, so I did check my work just to make sure I have stuff in the right place before we move on. So the adjusted trial balance is just the total of the trial balance column in the adjustments column. Once you get this column correct, then you can kind of disregard the first two columns or the first two sets of columns for a little while. We're going to concentrate on this adjusted trial balance column and these last two sets, which are the income statement and the balance sheet columns. So I'm going to go all the way back over here to the account names. And if you recall, when I started this problem, I said these account names are in order of assets, liability, 2 equity accounts, 1 revenue account, and then everything else is expense accounts. They're in that order because it makes it really easy for us to split those accounts up between income statement and balance sheet accounts. So when I'm reading these lists like this, I always like to find the revenue account because to me that's just a really good benchmark. So our revenue account is fees income. So if you can find the fees income account and start there, starting from there, there's a revenue and all expenses. Revenue and expense accounts go on an income statement. So all of these accounts at the bottom are income statement accounts. Again, find your revenue account. If you can find your revenue account, everything above that is assets, liabilities, and equity. Assets, liabilities, and equity go on the balance sheet. So find your fees income, and you should know that everything above the fees income is a balance sheet account. So balance sheet at the top, income statement at the bottom. So when we move back over to our columns, you'll see an income statement set of accounts and a balance sheet set of accounts. So what we're going to do is take these amounts from our adjusted trial balance and we're just basically going to sort them between income statement and balance sheet. So it really doesn't matter if you want to start at the top or if you like to start at the fees income and work down and then go back above, however you like to do it. I'm going to start with the fees income because I just think that's a really good benchmark. So this is our revenue account. That is the first income statement account we have. So it has a credit balance. It goes on the income statement, and it's going to go on the income statement at the balance. So basically, all we're going to do is work from the adjusted trial balance column and sort these over into income statement or balance sheet, which we can't see right at the moment. So once you get that fees income in the credit part, everything else is an expense. So you're just going to take all of these expenses and move them over here in the income statement. And my apologies, you can't really see the top and the sides at the same time sometimes, so which is why I'm trying to narrate what I'm doing. So I'm just putting all these expenses over. This is the income statement debit column. And now I'm at the bottom. So there's our revenue and our expenses in the income statement. That's all of the income statement accounts. So once I get those filled in, I'm going to do the balance sheet. Balance sheet's here. I'm going to again work from the adjusted trial balance amounts, and everything above fees income, which was right here at that $95,500, everything up here in this section goes on the balance sheet, and it goes on the balance sheet the same way it is on the adjusted trial balance. So if it's a debit over here in the adjusted trial balance, it's going to be a debit on the balance sheet. So we're just going to move those over. And I can't really see the account names, but it really doesn't matter as long as you put them in the same column that they're supposed to be in. But I could tell you just by looking at these, those are all debit balances. Those are all assets. This is a contra asset. That's at accumulated depreciation because it works the opposite way. And once we get into we start into our credits, we're probably into liabilities and equity because credits are the normal balance of liabilities and equity accounts. And then we have one last one that's a debit, and my guess is that's that withdrawal account. So if you come over here, you can kind of see that was the last one. All right, so there's your assets, basically your liabilities and equity down here, and that's all your balance sheet accounts. So you'll notice that everything on the adjusted trial balance column gets moved over, but it only gets moved over one place. So it's only either in the balance sheet or the income statement. It's not going to be in both. So let's check and make sure I got everything in the right box because these worksheets are really, oops, I'm missing a 3. So I've got an incorrect amount there. So let's fix that. Thank goodness sometimes errors are easy to fix. That one is one that's just a typo. So let's fix that. All right, let's look at the bottom of the worksheet. We've got these sets of columns, and when we looked at the trial balance set, we noticed that they were in balance. This is the adjustments, and they are in balance. The next column was your adjusted trial balance, and they are in balance. Here we've got the income statement, and you'll notice they are not in balance, and neither is the balance sheet. So let's look at our income statement columns. We've got to do something to bring those columns into balance. So I want you to think about the income statement and what it tells us. When we look at an income statement, it tells us how much money we made, bottom line. It tells us how much money we brought in, which is right here, that's our revenues, and how much money we spent to make that revenue, which is our expenses. So if we look at an income statement, it would show our revenues, less our expenses, and then the bottom line would say what our net income is, or if we had a bad year, it could be a net loss. So that's what the income statement tells us, net income or net loss. That's the bottom line. This column tells us the same thing, it's just in a different format. So here's our revenue, there's our expenses. If we take our revenue and subtract out our expenses, which is right down here, that's our total revenue, these are our total expenses, that will tell us what our net income is. So let's see, we take $95,500, and that's our revenue, subtract out $73,600, which is our expenses, we know that we had a net income of $21,900. And I know it's a net income because the money we brought in is more than the money we spent. If this side was bigger, if we spent more money than we made, we would have a net loss. So this is where it comes into making these account columns be in balance. So we're going to take the net income and we're going to cause these account columns to balance. So $21,900 is the net income. Again, that's just the difference between these two. And you'll notice if I plug it into the little side, that causes these two columns to balance. I'm going to move over here because there's one more box over here we need to fill in. It's just that label that says this is the net income. All right, we still have an issue because our balance sheet columns are out of balance. So I want you again to think about when you did the financial statements, who has claim to the net income? Remember when you calculated the net income and it shows up at the bottom of your income statement, that amount moves over to the next financial statement, which is the statement of owner's equity. And that net income increases owner's equity on the statement of owner's equity. And when you finalize the owner's equity for the end of the period on that statement of owner's equity, then you take that amount and it shows up as the new owner's equity on the balance sheet. So ultimately, that net income filters through to the owner's equity, which increases, let's find it, which would increase Alexander Neal capital on the balance sheet. That's ultimately what's going to happen. On our worksheet, that's basically what we're doing. We're just doing it in a different format. So we're not going to mess with Alexander Neal capital up here. But you'll notice he has a credit balance. We're going to add that net income because If we were to change that and add to his balance up here, then we would add the net income and we would be in balance. But we're not going to mess with those. We're going to add that net income down at the bottom. Whoops. I hate it when it does that. So take your net income, add it over here to the little side of your balance sheet, and you'll notice that comes into balance. So once you figure your net income, which is the difference in these two, plug it in the little side here, plug it in the little side over there, and you should have two sets of columns that are then in balance. So that is how you do a worksheet. I think there's one more question. How does the insurance adjustment affect prepaid insurance? Well, there's the adjustment. Here's our prepaid insurance. We started out at $55,800. We adjusted $7,200 credit, which then caused our adjusted trial balance for prepaid insurance to be $48,600. So it caused it to go down by $7,200. So we're going to click here. It was a decrease. That one's right. And let's just scroll up a little bit. See how this should end up. And everything's in balance. Now, if you get lots of green checks and your problem is saying that it's not correct, it's likely that you're just missing a box. You've probably noticed on your homework, if you don't put something in a box that needs something, it will not tell you that you're missing something in a box. So you won't see a red X. You'll simply see up here at the top, it'll say answer is complete but not correct. That probably means that you're missing a box. So the best advice I have is just to make sure that everything that you've got over here that you've moved across into the right column. If you get really stuck, send me an email and I can look at it, and I can see where you're missing stuff, but you actually can't see that. So anyway, I hope this helps. Chapter 5 is kind of a difficult chapter, so hang in there. It's going to get easier as we continue forward in the textbook. Have a great week, and I will talk to you soon.